welcome to another amazing edition to Building Out Loud podcast. I am your host, MacTheVC, Matt Conwell, founder and managing partner of Rare Breed Ventures, a pre-seed to seed venture fund here in Baltimore. I'm here with my co-host, lawyer Liam, aka Liam Gill. How are you doing, Liam?
Doing good. For the folks at home, you won't know this, but we're jumping in here on a weekend in multiple episodes back to back, making up for the hard work we're putting in during the weeks.
I was not going to give up the game, but Liam has done so. So don't worry, I'm going to do a wardrobe change at some point. So if you're not paying attention, you wouldn't be able to tell the difference. That's just how we roll. By the way, before we kick this off, I need everybody to help me give a special shout out, congratulations to my man Liam Gill for passing the bar. He is officially a lawyer in Canada and a few other places too. Like he's a lawyer all over the place. He was a lawyer in the UK before. Now he's legal in Canada, and I think some places in the US. Isn't that right, Liam?
Not in the US. I haven't passed the bar in the US, although I'm qualified to sit the bar in the US, but I haven't actually gone through and done it. But yeah.
But he's not legally a lawyer in the UK and in Canada. US coming soon. Shout out to lawyer Liam.
Yeah. Assuming I don't start a company in the next month, which is highly unlikely, I'll sit the US bar. Well, the New York one, probably.
There we go. Congratulations. I know you've been working hard, brother. Happy for you. You're going to have to edit this. Do I need to give a shout out to our sponsors before we go into it?
No, you don't. It's all good. We'll edit that in. We'll edit that in on the back end.
Got it. Cool. All right, folks. So today we got a special topic. It's a topic that if you follow me on Twitter at Matt Conwell, you would know that about a week or two ago, there was a lot of news out there about this investment in this real estate company by this gentleman by the name of Adam Neumann. For those of you who don't know, Adam Neumann is the founder of WeWork, the infamous founder of WeWork, who raised $70 million for a crypto startup and then raised $350 million for a new real estate startup. Both were backed by Andreessen Horowitz. And when this news came out, I put out a tweet. It says, a reminder that in times of economic downturns, allocators turn back to what they deem is safer. That's right. You'd get fired faster for investing in an underrepresented founder that then investing in Adam Neumann from WeWork fame, and with a giant check too. That was my tweet. If you followed it, it made quite a bit of news within a couple, articles and such, and I gave some talking points. But with that, Liam, what did you think about all the Adam Neumann news?
Yeah, so I think it's a very complicated topic.
Is it really complicated? It doesn't really seem complicated. It seems pretty straightforward, in my opinion, but I'm gonna let you say how complicated it is.
This is very complicated, far more complicated than I think anyone will give it credit for. I think there's, number one, you have to recognize that the company that made this investment is Andreessen Horowitz. And Andreessen Horowitz is far and away the largest venture capital firm in the country. They have the longest track record. They're recognized, by most LPs. They have billions of dollars. Like, aside from, the Vision Fund, which was just blown away, there's nothing that can compete with the size and scale of Andreessen Horowitz and the amount.
I think Sequoia would have something to say for that, but okay.
Yeah, here's my point. Sequoia is big. And Sequoia is very specialized and does a great job at working with founders. They still do a lot of early stage work, but Andreessen Horowitz isn't on that level. Andreessen Horowitz, even if they are, they don't want to be. Andreessen Horowitz wants to be fucking BlackRock. They want to be the next big thing, and they want to take the same way that BlackRock was able to take equities and package them and sell that into become a multi-billion dollar business with trillions of dollars under asset. That's what Andreessen Horowitz is trying to do. And the way to do that, the way to get trillions of dollars under assets, and the way to become a multi-billion dollar company isn't to put $350 $1 million checks into companies. It's to put one $350 million check into a company. So I think that in a really weird, messed up way, going to Andreessen Horowitz and asking for $350 million is going to get you a lot more face time than going and asking for $1 million, because they just have so much money and they just need to spend that money. And for them, it's a lot easier. Like, you run a fund. How much time and effort and money does it cost to vet companies, do due diligence, take meetings? Like, if you could choose to put all your, like, significant portion of your fund into one company versus 300 companies, you're going to spend so much money on the management, like as a management company on the back end. And I think that's where Andreessen's at. And for them, 350 million isn't a significant check size. Like, for what they're trying to do, for what they're trying to build, 350 million for them is something that they're looking to standardize. They want to standardize like large check sizes so that eventually they can become a publicly traded company. They can have trillions of dollars under asset. They can be regularly pumping hundreds of millions of dollars into larger companies.
Pause. Quick timeout, just to give some perspective. First and foremost, it was reported that Adam Neumann raised $350 million, and Andreessen Horowitz led that. That doesn't actually mean Andreessen Horowitz wrote the full $350 million. It just means they wrote the largest check of that. Not 100% sure what the actual size of it, but we can all believe it's very sizable. And to Liam's point, the amount of money and effort it takes to write a $1 million check is the exact same amount of money and effort it takes to write a $350 million check. So if you have a $9 billion fund or $10 billion fund or multi-billion-dollar fund, you don't have but so much time and resources to write a bunch of small checks. It's a lot easier to write bigger checks. And also, once you write the checks, you still got to support those companies. So if I got a $9 billion fund, there's only so many companies I'm going to have time to support. So writing the bigger checks is always easier, right? Which is what Liam's trying to get to. All right, back to you. I just wanted to clarify for folks who are paying along, following along.
Yeah, no, I think that's an important clarification. I think that another aspect to look at it is time. Like, if you need to spend $3 billion, we know most VC firms are aiming to return in 10 to 12 years. You're going to need to deploy that money within 3 to 5. So again, you're looking for like these massive, massive Hail Marys. And we saw exactly this with the Vision Fund. This is why I find it very surprising that people think that this investment is sort of off the rail. I get that I have not even gotten to the fact that the investment was in Adam Neumann. I'm just looking at like the size of the investment and like what they're trying to do. But I think that there's something to be said for the fact that they need to deploy so much capital so quickly, because if they don't deploy it quickly, they're not only stretching out the time it takes for them to see returns on their capital, but they're also prohibiting themselves from raising more capital. If they've got billions of dollars yet to be deployed, and they go to an LP and ask for billions more, they're going to get laughed at. But if they have money going out constantly, they can bring in money constantly. And I think a lot of it in the behind the scenes, the parts that I think are more complex that people aren't thinking of, is at the end of the day, Adam Neumann starting a business, and everyone sees that. But Andreessen Horowitz is also a business, and Andreessen Horowitz has a business model. And people are forgetting Andreessen Horowitz's business model when they look at this. And when you look at Andreessen Horowitz's business model, this type of investment makes so much sense. Like, they're moving in a whole different direction. They're trying to do something unique. And this type of investment is what it's going to take for them to get there. So I think that's the sort of complex part that I think people are overlooking, and that I think people need to contextualize. And a lot of the times when founders see these kind of weird investments, I think that you need to consider the fact that there is a business, and that business is called venture capital, and it operates a way that is very different to your startup and to your own business. And if you want to raise venture capital, if you want to understand why certain funds invest in certain ways, like, you need to understand that entire different industry and business. And if you don't take the time to understand that, a lot of investments are going to look really weird to you, because different funds invest in different ways. They prioritize different things. Mac has his own way of investing in his specific type of founders, and for him, it's a unique value prop. Like, Mac spends hours and hours and hours, going on podcasts, talking to people, going to events. Like, for him, that's the way that he gets founders coming to him. That's the way he finds people who might not have the confidence or might not, even be welcome in the doors of somewhere like Andreessen Horowitz or Sequoia or like these big names. Like, that's the way he invests, and he finds a value doing that, and he makes money doing that. Andreessen Horowitz has value and makes money putting very large checks into very noticeable brands and names. That's like what they're trying to do. And you have to understand that side of it to really analyze this deal as a whole. So that's my behind the scenes. Do you have anything to say back before we sort of jump into tackling the person himself? I can't hear you. I think you're muted.
I was definitely muted. No, I think I want to dive into the person himself, and then I'll double back and try to contextualize all of it as one thing, because there's a lot of nuances here from a venture capital standpoint and why somebody would do this. But let's talk about Adam Neumann and who he is and like what he's done and why there was so much outrage before I kind of give the VC evil genius perspective of all this.
Okay. I'm happy to jump in Adam and WeWork specifically.
Yes,
I'm going to say that. Okay, I'm gonna break this up into two pieces. I'm gonna break up WeWork and Adam as separate things because I think they need to be looked at differently.
They're all one thing, but okay.
No, WeWork started out as a very, very good idea, which was we're gonna arbitrage this market where founders and smaller companies need to pay large amounts over large periods of time to get commercial real estate in major city centers. And what we're going to do is we're going to sort of group these up people all in together. We're going to charge them like a surplus and get rid of the long-term commitment. We're going to offer some sort of software tech on top of it, some sort of community. And in exchange, the landlords who own all these buildings, they'll rent to us at a cheaper rate. They'll rent to us more space. And for them, it's a lower risk because we're this massive company who's guaranteed to pay. And at the end of the day, we're essentially going to give long-term, low, secure loans to landlords, and we'll sell short-term, potentially unstable loans to a large amount of people. And the way this is going to work is because we have all this software and all this community and data, and this is going to help us get all these people in. We'll build a brand, and we'll make the money on the split between what we're paying for the real estate and what we're getting for people. The idea itself wasn't bad. It was admittedly built for a bull run. It wasn't built for an era where the market might swing down. And as soon as the market swung down and people started up and leaving, WeWork saw its struggles straight away. So that's the first thing. I think WeWork was a good idea. I think when you look at WeWork's valuations and the stage to which it got, it was absurd. Like the thing Adam Neumann did was he convinced everyone that a real estate investment company was a tech company, and it just never was. If you look at WeWork's valuation today relative to the amount of square foot it owns and compare that to other real estate investment companies, it's right on par. Like it works perfectly in terms of its current valuation. It didn't work at the valuations it was getting from the Vision Fund or from other major investors prior to going public. And I think there's two ways of looking at that. Number one is that Adam was a con man, and I think that's partially true. I think the second one is that people in Silicon Valley wanted to believe so bad that technology can fix everything and that they can fix everything that they allowed themselves to get tricked into believing this. And the matter of fact is the markets aren't stupid. Like you can have crazy private valuations. You can have Andreessen Horowitz, Sequoia, like all these major venture capital firms. They can decide that your company's worth whatever the hell they want and give you whatever amount of money they want. But as soon as you become a publicly traded company, suddenly you've got, billions of retail investors. You've got Goldman Sachs, JP Morgan, you've got like all the major banks in the world. Everyone is looking at your business and trying to evaluate its worth. And every one of them can make money by guessing that it's overvalued or undervalued. So there's no longer this like one-sided market that exists in venture capital where everyone wants the growth. Everyone benefits from growth. Like people benefit from you failing once you reach public markets. And what happened was they went public. The public markets were like, why the fuck are we valuing a real estate company as a tech company? It has like 10x too high of valuation. And WeWork crashed, and people valued it properly and valued it as the business it was. And Adam looked bad in the process. Massa looked bad in the process. Like, everyone involved looked bad because they'd essentially taken this real estate company and just given it way too much money and then spent that money in stupid ways, like ways that have no relation to a real estate business, ways that are associated with tech companies, like trying to increase employee morale or trying to have like big parties or trying to like, the sort of stereotypical things that tech companies do. So that's kind of like my analysis of WeWork, is that it was fundamentally a good company. It got classified as a tech company when it should have been a real estate company. And then once it had a whole bunch of money in, it got completely mismanaged. Anything there that you want to comment on, Mac?
No, I mean, you're right on all accounts. And I will say that the valuations we saw for WeWork and how the public markets didn't react so kindly to it was actually, we should have recognized as the beginning signs of what was to come for the economic downturn we see now. Right, because the issues with WeWork, with the inflated valuations and everything, is the exact thing we saw with all the companies that got these high valuations in 2019, 2020, 2021, now having down rounds, now having issues, like all following the same pattern. Like that was a good starting point for us to see, like, okay, something's happening, but we all just wrote it off that this is just one bad actor and one set of bad investors, right?
Yeah, for sure. I think obviously the next point I'm going to move on to is Adam himself. But before I get there, I just want to say that there's the very famous story of Massa's investment in WeWork and Adam going and asking him for $1 billion, I think it was, from the Vision Fund, and Massa sitting down and being like, well, tell me how you would spend $4 billion, and then going on to invest significantly more than Adam was even asking for. And obviously I wasn't in the room. I have no clue like how the hell that actually played out. What I do want to say is I think that, again, goes back to the point that I was making about Andreessen Horowitz and why they're throwing money at companies in large check sizes, which is that Massa promised to spend $100 billion in 5 years. So he had to find ways of spending it. Like you had to go to a company like WeWork or Uber, like these massive companies, and be like, if I just gave you a crazy amount of money, tell me what you would do. Like he needed a way of spending that. And Andreessen Horowitz, if they want that same business model of bringing in billions and spending billions, they're going to need to find ways of spending large amounts and writing large checks. So I think that's another weird story that founders are like, why can't that happen to me? And it's because it's a very specific circumstance that had nothing to do with WeWork and everything to do with the Vision Fund and where the Vision Fund was at and what Massa's goals were with the Vision Fund. And to sort of cut that story short, the Vision Fund lost $23 billion. So it didn't work out, and it's not the best way of investing. So, like, some founders get lucky and they get a shit ton of money from some guy who has no clue what the hell he's doing. Like, it's kind of just the way the markets work. And who knows if Andreessen Horowitz's business model and strategy is going to work out in the next 10, 20 years. They are trying to scale up at a very fast rate. But again, if you're a founder and you hear these types of stories, don't get disheartened or don't wonder what you're doing wrong. Like a lot of it does have to do with the business of venture capital on the back end, which is why I wanted to like try to go through that all at the start to unpack it. So you don't always feel like it's like a one-way facing, industry, kind of like a bank where you're just going and writing and they're like, yes or no. It's very, very different to that. It has a lot to do with what their goals are and what their LPs want and the timelines they're working on, the amount of money they have, etc. So moving on to Adam. I agree with you. I agree that Adam is not someone that I personally would invest in. I think that there's two things that you can consider. Number one is you can take the approach that I'm assuming Andreessen Horowitz did, which is, did Adam lie to investors? And I feel like, go ahead.
No, I just wanted to interject just so people can hear my voice because Liam's been running with the ball here for a bit. So just wanted y'all to all know I'm still here. All right, Liam, back to you.
Yeah. So I think that that's the first question. I think Andreessen Horowitz is going to ask that. I think a lot of investors will ask that. It's like, do we feel that Adam misrepresented himself? Did he do something wrong? Did he act incorrectly? And I feel like if you're Andreessen Horowitz, they must have answered no. Because if you're sat there and you're giving 300 million or 350 million or whatever the hell their actual check size was to a founder that you feel defrauded investors, then you're just a fucking idiot. Like, I'm just going to leave it at that. Like, they must have decided that he might have mismanaged stuff, he might have made bad decisions, but he didn't intentionally do something wrong. He didn't intend to, self-deal or to mismanage money or to defraud investors or to enrich himself at the cost of investors. Like, they must have made that determination on their own that he had good intentions in running WeWork and that things just didn't work out or he made bad decisions. So that would be my first point, is that I think that evaluation was made. And there are people, I think I would include myself in that second group, who don't agree with that evaluation, who think that the things he did were fundamentally against the interest of shareholders. And I've seen a lot of people comparing it to like Theranos. I don't think it necessarily went to that level, because obviously Theranos had a lot of an impact, not only on shareholders, but on like actual consumers and like faking blood tests, like doing crazy shit that was at a whole different level. But as an investor, you still don't want, I think my bar is a bit lower. If I'm even asking the question, something has clearly gone pretty wrong, and I'm not really interested in it. So that would be the first point. Is I think if you disagree with the investment, you can have simply answered that question in a different way. Second point, I think that Andreessen Horowitz values second-time investors or second-time founders. And I think that there is an extra value add in that people are forgetting. Because 90% of startups fail, something around there. And most founders, myself included, Mac, I know you've done the same. Like, if we start a company and we fail, it's just inherent in us. We're going to start another one. And VCs bet on the fact that you're going to learn from the first time and do better the second time. And I think that there is an element of that with Adam, that people are betting on the fact that, at the end of the day, this is a guy who, no matter what you think of him, he took a company, he built it in a market which is commercial real estate that nobody really believed could be revolutionized. Let's be honest. Prior to WeWork, no one thought that was an industry anyone was going to change, and created an entire category. To this day, if someone's like, you should get a short-term office space, someone will say, go to WeWork. Like that, you can't deny that he did that. That was his accomplishment. He created this entire class and took that company public. So
awesome. I'm jumping in now. That is great background and perfect point right there. And so I want to seize on this, right? Like, let's start off and say, what is the job of venture capitalists, right? A venture capitalist job is to take other people's money and make them more money, right? And at the stage of an Andreessen or what have you, they're taking money from pension funds, from endowments of universities, from large foundations, from extremely high net worth individuals like billionaires and such. They take their money and they use it to invest in private companies to make more. We are all glorified financial advisors. You will hear me say that time and time again, right? Right there. Now, for all the issues people have with Adam Neumann, for all the things that he's done, what Liam just said is the most important part, right? What's the most important part? The most important part is that Adam Neumann made money for his investors. People keep saying WeWork failed. WeWork did not fail for their VCs. If you were an early investor in WeWork, right, when all the stuff was falling apart, guess what? SoftBank gave WeWork $4 billion on a $20 billion valuation in 2017. I don't care what stage you invested in WeWork at that point, as an early stage VC investor, you made money and you probably made a lot of it. Now, it's a different story for retail investors before going public, and maybe even for some of his employees who are in lockups. Like, that's a different conversation. Did it work out for all those folks? No. But was WeWork a failure? No. It's on the New York Stock Exchange right now, right? There are people who made tons of money. And so what you need to remember is Adam Neumann started a company and grew it to be a multi-billion-dollar company. WeWork was founded in 2010. By 2017, it had a $20 billion valuation. Whether that valuation was a good one or not, that's significant. And so there are a lot of people who made a lot of money, while Adam Neumann built a multi-billion-dollar real estate company. Technically almost like real estate fund, but this real estate tech company, right? There's something to be said for that. So when you see folks like Andreessen Horowitz taking part of a $350 million round, you got to think of it from this standpoint. Not, is Adam Neumann a terrible person, or has he done some questionable things? Is he morally reprehensible when it comes to business? Okay, cool. But here's somebody who's built a multi-billion-dollar real estate company and who along the way learned a lot. And guess what? If you build a multi-billion-dollar company, you have a massive, crazy network, which gives you a massive, crazy advantage in the future while building a company. The reason why VCs like investing in repeat founders is because you learned a bunch of stuff along the way. And part of that is you grew your network too. You grew your network of investors, of advisors, of customers, of partners. Your ability to pick up the phone or write an email to make things happen becomes easier and easier the more successful you've been. Adam Neumann's been really successful. So when Adam Neumann walks into Andreessen Horowitz's office, it's like, hey, I'm the guy who built a multi-billion-dollar real estate company. And yes, I made mistakes. But that was 4 or 5 years ago. I've grown from that. I've learned from that. I've become a better person. I've become a better operator. I've been able to invest myself. I understand your position. And from all my experience in real estate and what I've done, I have a new company that's going to be bigger than WeWork. That's a really enticing standpoint, right? And you're already a fund that needs to write large checks. And here's somebody who's shown that he's been able to use large checks of money to create a massively big business. And so there's a higher chance that he'll be able to repeat that or build something significant again, a la Elon Musk, right? That could be the next big thing. That's a really enticing idea from a VC standpoint. From a moral standpoint, that's a different conversation. Everybody being upset that this morally compromised, or somebody who's shown to be morally compromised in business, getting a second chance at such a large dollar amount, I get it. It's annoying to me too. But as a VC, I understand where they're coming from, because our job is to make money, and he's proven to make money. So all the people who are outraged, myself included, on social media, most of you have never made money for your investors. He has, in a significant way. A VC is going to back that every time first, because he's a known entity versus somebody who's potential. But here's the honest truth. The most likely outcome of any company is it's going to fail. Most businesses fail, flat out, just flat out, because building a business is hard. So you founder who's early stage, maybe even got, $500K million in revenue, cool. You are years out from being anywhere near the heights that Adam Neumann has already gotten to. And that is a shiny object that is hard to turn away from as a VC. Now, is that the right decision? Depending on who the VC's investors are, who their limited partners are, the people who invested in their venture fund are, it might be. Very often, they're just looking for you to bring them back money. Should there be some morality clauses in these things? Maybe. Should some funds care more about morality? Absolutely. Do I care about that stuff at Rare Breed? Sure. But I got asked the question by several reporters, what would I do in that case if Adam Neumann came to pitch me? And I said, I hope I would be moral and conscious enough to say no. But the idea of having a founder who's created a unicorn give you a pitch for what you believe could potentially be another unicorn almost as big, that's hard to turn around. It's the same thing of like talking about tech companies not hiring people from different backgrounds or from different types of schools. Well, I'm gonna tell you, when you put out a job application and you put out you put out that you got a new job opening and you start getting applications. If you see in your application stack a bunch of, valedictorian from Harvard, head of my class at Stanford, top of class at Brown, it's real easy to get enamored and miss that student from Morgan State University or Alcorn State University or even Michigan State University, somewhere in the middle of the stack, who might be that hidden gem because you got enamored with all the names and accolades and everything else, right? That's a real thing to contend with, right? But you have to be conscious and you have to be intentional to make sure you don't get enamored and you look through all of them, right? Not every VC's got the time or wants the time or even cares. So when we start talking about, well, dang, how does Adam Neumann get another shot? That would never happen to a black founder. Probably not. This is America. It is what it is, right? But us shouting about it's not going to change it, right? All we can do is show light to it, let everybody know what's going on, and then we got to do the work to prove that, like, hey, even though Adam Neumann sounds like a shiny object, there's some other more respectable and morally uncompromised founders out there that you can back to do the same thing. Now, that's just, being real and practical about it. But, man, it must be good to be white in America, boy. Woo, you get away with some stuff. Like, I'm not trying to be racist here, folks, but, like, just to be honest, like, damn, man, Adam, you, woo, must be nice. But then let's talk about the next piece of information that came out. Did you see this, Liam? Apparently, Adam Neumann's family office made an investment in this company called Alfred, whose tagline is the future of living, right? Like this says, welcome to the future of living. That's their tagline. You know what's really interesting? When Mark Andreessen from Andreessen Horowitz wrote about defending this investment, he mentioned that Adam Neumann was building something that was very revolutionized and could be the future of living. Apparently, Adam Neumann's new tech startup looks very similar to one his family office invested in. Oh, what do you think about that, Liam?
Yeah, well, obviously, I think this goes back to like just Adam. Like the third point I would have made about him was the same as you're making. It's like, even if you don't think he defrauded people, you can't say with a straight face that he is like morally incorruptible. Like he did make some morally questionable decisions, and he seems to have a habit of hedging his bets and like self-dealing and doing whatever it takes to provide the best returns for Adam and not for his company. And although historically, many of the venture capitalists who've worked with him have still done well, that's not generally the recipe for success. Like normally you want to be all in on the company you're building and, have some sort of undivided loyalty to that company. And Adam just hasn't shown that with WeWork, even in the early days, like the stories of him, raising his own salary or buying assets from himself, or like, there's a lot of weird stories that went around. And I don't know how many of them are true, but there was a lot that made it seem as if he was always putting himself above the company. And definitely the way he treated employees or the way that he, went about making certain acquisitions made it seem as if he was making them for his personal use more than the business use. So I'm not gonna like comment specifically on what he is doing because I definitely don't have enough information to go out and criticize what he is doing currently. But I will say that you have a person with a history of self-dealing and of doing what is in his interest over the interest of investors in the company. And it seems like that person is continuing to do that and is backing multiple horses in an industry that he thinks will succeed. I don't know if that's the case, but that's what it seems like. And if it is, it seems to me that he hasn't really learned his lesson. And at the end of the day, if you look at this from an outside party's perspective, he's going to win. One of the two companies wins. Like, there's multiple companies with hundreds of millions of dollars, and one of them will probably win. Like, he's going to walk away with a lot of money. Will Andreessen Horowitz and his other venture capital, backers walk away with any? That's like the question. And then, it takes us back to why they would make that investment in the first place if this is the way he's going to act. So, yeah, I think it's a complicated scenario, but I think it's a bit too early to pass judgment, and we don't have enough information to like fully understand what's going on. But if that is the case, and he's kind of put himself in a position where he's going to win, and maybe his investors will or won't, that's definitely not something that, as a VC, if I saw that, I would have any interest in working with someone like that.
Adam, you're not a great person. I just want you to know that. Would I back you? Probably not. Are you going to make a lot of money? You probably will. That's the part that sucks. And that money could be very well better used for founders and funders that look like me and Liam, but hey, it is what it is, folks. But with that, I hope you've enjoyed another amazing edition of Building Out Loud podcast. I am your host, MacTheVC, with my partner, lawyer Liam, aka Liam Gill. Liam, before we roll out, you got any last notes for the folks?
I think we covered it pretty in-depthly. I'm going to be pretty interested to see how this all plays out. I really like the question I have right now is if Flo's pitched as a tech company, which is actually a real estate company, and he's redoing the whole WeWork scam in a housing market, or if he's actually pitched as a real estate company and Andreessen's happy with it, 3 or 4x, and that's what's happening. It would be insanely cool to know how that went and what was promised to those investors, because you would think that if they think they're going to get the type of WeWork returns that were promised sort of when the Vision Fund came in, that investors would know better. But as you said, even if they weren't promised that, even if they were promised less, given the amount of money Andreessen has to invest, if they thought they were going to get 4x, on it, it's definitely a good investment for them.
That's what it is. Well, we'll see you next time. Make sure you subscribe and review. Let's, trick these algorithms. So subscribe, unsubscribe, resubscribe, unsubscribe, all that good stuff. Show everybody how amazing we are. Make sure you tell your friends. If you leave us a 5-star review with a comment, we may just read it on the podcast. Get yourself in here. We might start doing a mailbag, but the mailbag will be from comments left with 5-star reviews. So make sure you let everybody know how great we are. If you want to email us, hit us up at buildingoutloudpodcast@gmail.com. Don't worry, Liam reads them all and gets to them, so you got to worry about me and my crazy busy inbox schedule and all the good stuff. Make sure you hit us up on Twitter, MacTheVC, Lawyer Liam, and we'll see you next time, folks. Peace out, y'all.